thank you so much for watching the video. In this video, I want to bust a myth, and that myth is, do you really need 20% down to buy a home nowadays? Maybe you needed back then, but nowadays 20% is still the norm. But I've helped clients that put down 5%. I've even helped out clients that put down 3.5% with certain government funds or government assistance. So you do not have to put 20% down. But the more that you do put down, the lower your monthly payment is. But if you work at the numbers, sure, if you put down less than 20%, your monthly payments are going to be a little bit higher. But at the end of your 30-year loan, it usually comes out to about a few $1,000s more than if you put down that 20% or not. The more that you put down, you also have to keep in mind that let's say you put down 50% or more, sure, you have a lot more equity, but that cash that you put down, you're not going to be able to touch that cash again. It's not like you can go to a bank and pull out that money anytime you want. So keep in mind that you can put down as much as you want as a down payment, but it's not required. And especially for first-time home buyers, usually they don't have that much to put down. So which is a great news is that for conventional loans, which is the most common, conventional loans, you can go to any bank or go to any mortgage lender and get that loan. The minimum requirement is 5%. That's right, 5%. So you do not have to put down 20%. Just keep in mind that when you work at the numbers, make sure that you are comfortable with the monthly payments. Make sure that you are comfortable with the taxes, the utilities, the maintenance, anything that pops up. So make sure that if you were going to put down 5%, make sure that you calculate everything to the T. Maybe you are an engineer, a lawyer, an accountant, or a doctor, and maybe you don't have the down payment yet, and you can afford the higher monthly payment, then by all means put that 5% and purchase your home. But also keep in mind that if you put lower than 20% down payment every single month, you will have to pay a PMI, which is a private mortgage insurance, which usually is 0.60% interest every single month. So not 60%, but 0.60%. So a very minuscule amount, a little bit extra every single month for the private mortgage insurance, and it's there just in case that if you do default on your mortgage payments, then the bank is covered with the PMI insurance. So the myth is busted. You do not have to put down 20% down to buy a home, but just make sure that you are familiar with the private mortgage insurance added on top. Make sure that you are familiar with the government assistance available for you. Maybe you qualify for FHA loans. Maybe you are a veteran or a retired veteran that qualifies for a veteran VA loan. Also make sure that you are comfortable with your monthly payments every single month as well. If you do decide to put less than 20% and add in that PMI insurance. And also I do not recommend you putting down more than 20%, because as mentioned, you cannot pull out that money anytime you want, like you can if you have money in the bank. So yeah, this is the third video of the video series to turn you from a novice to an expert at buying a home in San Francisco and the Bay Area. If you enjoyed the video, please like, comment, and share, and I will see you in the next video. Take care. Peace.